Financial markets have reacted positively to news that the United States and Iran have agreed a framework deal to end their conflict, with oil prices falling sharply and stock markets rising around the world. The proposed agreement, due to be formally signed later this week, could see the reopening of the Strait of Hormuz, a key route for global energy supplies, potentially easing pressure on fuel and energy costs. And indeed, Donald Trump's number two is suggesting a preliminary peace framework to end the Iran war could be released before Friday. That's when it is due to be signed in Geneva by Tehran and Washington, though the US president claims the pen's already been put to paper. Take that with a pinch of salt. Vital shipping routes expected to reopen as part of the agreement, as I mentioned. And Director of Military Sciences Matthew Saville, let's hear from him. He says uncertainty remains.
The agreement that is going to be signed is simply a memorandum of understanding for how they will conduct subsequent negotiations. So this isn't a huge breakthrough so much as an extension of the so-called ceasefire, which I think, as everyone has seen, has not involved much ceasing of fire.
Joining me to chat about this further in terms of what all of this could mean for Irish households, businesses and the wider economy, I'm joined by Tommy Corbett at Carey Corbett Financial Solutions. Tommy, good to see you again.
Morning, Alan.
Thanks for popping by. So, look, we all hope this agreement is signed on Friday. I suppose, first off, how hopeful are you? As I said, and I don't mean to be cynical about Donald Trump claiming pen's already been put to paper, but how many times have we heard we're close to an agreement, close to a deal, and then it doesn't happen? And even heading into this, the US is claiming one thing, Tehran is saying that they've bent the US to their will in terms of what's in the agreement. So I guess we all won't be relieved until we see it signed. But are you hopeful that we'll see some sort of resolution here?
I think so, not just on an economic basis, but just in terms of war is never good for anyone, and the loss of life, etc., and all that kind of stuff. But like, if you look at the Obama deal back in 2015, that took 2 years or over 2 years in negotiations, and thousands of pages later before the deal was signed. So as I heard your debate yesterday, and I think it is just the heads of terms that have been signed or is about to be signed. I think there's a long road to go yet. So, but yeah, listen, it is better than it was, I suppose, 30 or 40 days ago. Will it be any better than it was 100 days ago before this whole war started? I don't think so.
It kind of a sense that, even if it all going well, it does return to the way things were before. That's all it will be. The Strait of Hormuz reopening, it was open before this all started. Is Iran going to agree to not build nuclear weapons? There was already an agreement there that with the Obama administration that was torn up by Trump. So we'll be returning to the status quo. That's even if they agree to that latter element of it.
Yeah, and I do think that Iran holds all the cards in this, they're basically...
Which is not how Israel and the US envisaged this when they went in there in the first place.
For sure, and there are other players apart from Iran and the US. Israel is a huge player in all of this as well. It depends on how they're going to behave, I suppose, over the next while. So yeah, it remains to be seen. Yes, it is. We are hopeful that things will get sorted out, that the war will cease, and Strait of Hormuz will open up and oil will start flowing again. But I suppose, yeah, where we are hopeful, or I am hopeful, it still remains to be seen as to what's going to happen.
Okay, well look, if indeed the Strait of Hormuz reopens and the ships are moving again, hopefully we'll see cheaper oil prices. What could that mean for Ireland?
Well, Ireland is a net importer of oil, so basically longer term lower oil prices should help push down headline inflation more quickly across the euro area, including Ireland. So that's good for everyone. It means basically more money in people's pockets because they're not spending it at the pump, and I think people's outlook improves as well if oil prices are to remain lower than they were.
Okay, but it's going to take more than oil prices coming down. Monetary policy reacts to more than just that.
Yeah, well, the European Central Bank looks at core inflation, also wage growth, service prices and overall financial conditions, not just energy, although we're after going through a huge energy crisis in the last couple of months. However, they must prioritise price stability. They want to keep core inflation at around 2%. That's their main remit. And so they are going to prioritise price stability even at the cost of weaker growth.
Okay, we spoke about the European Central Bank's 0.25% interest rate hike last week. Was that premature? I suppose that it's hard for them to know, for anyone to know how matters were going to progress in the Middle East, and indeed we're not there's not clear daylight there yet. But now, a few days on from that decision, does it feel like it was premature?
Yeah, I think the feeling was that they acted a little bit too slowly back in 2001, 2022, when inflation spiked to 10.6%, and they were a little bit, I suppose, slow in
following on from COVID.
We had huge inflation, as I said, spiked at 10.6% in 2022, and then we had a number of rate increases in 2022, which really affected people on like some variable and tracker mortgages, and it affected the markets obviously as well. However, with hindsight, if oil continues to trade significantly lower over the next number of months, that hike will look like it has been, it has been a bit premature. But again, only time will tell, Alan, really,
Okay, what will that mean then in terms of the, if you combine the end to this conflict and reduced oil prices, what will that mean for the ECB? Will they switch from, they brought in that 0.25%, we're up to 2.25% in terms of the interest rates. Will they start to go in a southerly direction? Yeah,
it looks like that. I suppose slumping oil makes it easier for the ECB to pivot to lower interest rates and for longer. Again, for Irish borrowers on trackers and variable rates, that points to kind of rate stability now, and could also look at modest reductions in 2027. Again, it remains to be seen. Again, I looked at the oil price today is at $80 a barrel, in around $80 a barrel at present. It hit about $115 a barrel in April. So it's good news. How long that'll take to filter through to the pump, obviously they say it goes up by like a rocket and down like a balloon. So I suppose from an Irish, I suppose, consumer's perspective, we will see the effects of lower oil prices, but it will take a little bit longer for those effects to be seen at the pump. Okay,
and I wonder as well, if indeed the ECB start reducing interest rates, how soon they pivot, because they only announced that hike last week, when they were bringing in those incremental increases in the aftermath of COVID, it was every other month. Do we have to wait a couple of months now before they start to reduce?
I would think so. They don't tend to do things too quickly. And in fairness, the conflict has been ongoing for over 100 days, so they weren't that quick to increase rates. So I think they're going to wait. They're going to adopt a wait and see policy, wait to see what happens in the Middle East before they're going to bring down any interest rates. They're also going to see what the effects of inflation, because we may not have seen the full effects of those higher oil prices feed into the system yet, and they might be a month or two away yet before we see those effects. So I think they'll adopt a wait and see mentality. They probably won't impose any further increases, assuming that the ceasefire or the war has stopped, but that remains to be seen.
Okay, look, I mean, obviously we're all concerned with our own lives and the situation here. We're hoping we'll see cheaper oil and that fuel and energy costs will come down. And for the average Clare and Irish household, I'm sure there'll be many listeners this morning, Tommy, will be wondering, is this winter going to be any easier in terms of the energy security situation for our country?
Yeah, we're hopeful. EirGrid, on their latest winter outlook, said that there's a comfortable buffer between the available generation of electricity and demand, which means that basically the risk of losing power is at an acceptable level again compared to a couple of years ago. And layering cheaper oil and gas prices on top of that, should result in lower fuel prices in relation to home heating and home heating oil and energy bills like electricity and that kind of stuff. But obviously then we need to be aware that, with climate change and all that kind of stuff, we could be subject to cold winter spikes in the future. So again, it remains to be seen, but it looks positive from this point of view.
And I mean, look, we don't want to be doom mongers or naturally inclined to see the glass as half empty, but you do have to be realistic. We saw the way this war came out of kind of nowhere in a sense. Even if this deal is signed on Friday, we hope it's one they respect and stick to, because we've seen a lot of the meaning of the word ceasefire in the Middle East means less killing and less shooting, not no killing or shooting. Even if we get cheaper energy prices, there's no telling if the conflict will flare up again and if those prices start heading upwards again soon afterward.
Yeah. we don't know.
As you say, they rise like a rocket, they fall like a feather.
Yeah, absolutely. And again, even if you look at even Europe, you know, the Russian-Ukraine war basically came out of nowhere. The Iran-US conflict basically came out of nowhere. So you can expect, or almost expect, another geopolitical shock into the future. So I suppose geopolitical shocks can re-emerge quickly, which means oil prices can reverse very quickly as well. So we just have to be cognizant of that. And I suppose fiscally, any monetary policies have to keep that in mind as well.
Every budget is hugely important, at the risk of stating the obvious, Tommy, but given everything that's happened this year with the geopolitical conflicts and the impact it's had here with the fuel protests, and indeed the €750 million plus that the government handed out in supports, what impact is that going to have on the budget? I was joined by Pierce Doherty yesterday, Sinn Féin's finance spokesperson, their deputy Dáil leader, calling for an emergency budget. I did put it to him, well, if the government did that, is that going to impact what they have to use in the budget come October? From your perspective as a money man, what should the priorities from an Irish lens be for budget 2027?
I think, okay, we are in the midst of a bit of a cost of living crisis at the moment with a couple of things that have happened, but I do think it's targeted cost of living supports that are needed rather than broad inflation stoking giveaways. So rather than, you know, one size fits all, a targeted cost of living support really is the way to go. If we've learned anything over the last 100 days, that we need to accelerate investment in the grid, in renewable energy, and to transition away from our reliance on oil and fossil fuels. And I think the quicker we can do that and become more self-sufficient, the better. So I think huge investment in that is needed. But overall, I think a prudent fiscal approach would be the way to go. Yes, we are doing very well economically as a country, but an awful lot of that is from your foreign direct investment, the American companies and all that kind of stuff. And our friend Donald Trump is mad keen to get those taxes back into the US. So how long those taxes will be paid in Ireland for is anyone's business, or, you know, no one really knows. So, and again, I think we need to accelerate, you know, capital spending, things like housing, transport, digital education, that kind of stuff. And I think the one big thing that I would like to see happen is manage the waste. You know, I just think there's so much money flushing around here that we're not managing waste, and we see it every day of the week, whether it's bike sheds or children's hospitals or all this sort of stuff. And they're our taxpayers' money, you know. And I think it's high time that the government kind of, you know, took note of that basically it's our money that they're spending, and if they did nothing else, only manage the waste that's going on, I think that'll be a big plus.
I think we'd all love to see that happening. Be a bit more careful with our cash, lads.
Right.
And lassies. Tommy, thank you very much.
Thanks,
as always. Tommy Corbett there from Carey Corporate Financial Solutions.